Thin Lizzy may have broken up, but the boys are back in town. This is the IssuesWatch podcast. Hello, and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm the partner in charge of accounting and auditing at Sobelco, and back with me today in person is Frank Boutillette, emeritus partner at Witham and my co-presenter for many A&A presentations and the Society's Law and Ethics webinar. Welcome back, Frank.
Glad to be here, Brad. Glad we can be back together again.
Welcome back, Hotter. All right. This episode qualifies for Nano CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. A quick disclaimer, the views and statements expressed herein are our own and not necessarily those of NJCPA, Sobelco, or Witham. Whew, that was a lot to go through. Man, I think that our house... Thank you very much. Thank you. Okay, so we got a few FASB updates, some AICPA and SEC stuff today. So first one, I just can't believe that this came out. The FASB, at a recent board meeting, came up with a crypto asset commentary and recommendations. Finally, the first one, which I know I'm interested to see, because you did a lot of SEC work, and I'm interested to see what you do, is to measure crypto assets at fair value using Topic 820 fair value measurement.
It's awesome.
It is. Remember, under the Accounting for Digital Assets guide that the AICPA put out a while ago, said that it was treated as an intangible asset. Right. And the good thing, because, crypto doesn't ever go down, huh? Yeah. So if the crypto goes down, you now have an impairment. And Liz Harper in my office were arguing one day. I'm like, okay, but if it impaired and it came back after, she said, but as of 12/31, it went down.
And as an intangible, it can't go back up. It stays down.
But that's the fair value at that time. So now we got fair value. So we can recognize the increase and decrease in fair value in comprehensive income in each reporting period. Interesting, comprehensive income. So that means it's not an equity security, and it's not. Okay, and recognize certain costs incurred to acquire the crypto assets, such as commissions, as an expense, unless the entity follows specialized industry accounting. So, but I thought that was really interesting, and for the people out there that are considering this, finally the FASB has come out with something. I'm waiting for it more official, but it was at one of their meetings. If you want to email me, I can send you the link as to what I had gotten in an email from them. Yeah, I get FASB emails.
So let's move right along to segment reporting proposal, topic 280, improvements to reportable segments. So this came out because the public needs to have more information about public companies. They want to know what drives their profitability, and a lot of public companies have a lot of different business segments that they have in their operations, so they want to have more information. One of the things I found interesting was that there's a requirement to disclose significant segment expenses that are regularly provided to the chief operating decision maker. So they want to know what the company knows, and they want it disclosed in the financial statements, which I find pretty interesting. Some other items they want is disclose the amount of other segment items by reportable segment and a description of its composition. Again, more detail, more transparency. They would also like the public entity to provide all annual disclosures about a reportable segment's profit or loss and assets currently required under 280 in interim periods as well. And also clarify that if the chief operating decision maker uses more than one measure of a segment profit or loss, at least one of the reportable segment profit or loss measures should be the measure that is most consistent. I know, that's a mouthful, isn't it? So what they're really driving at is whatever the company is using to measure their business profitability, they want the public to know that. Yeah. So it's very interesting where it's going. There's more transparency occurring now.
And what I got from that whole thing is that the chief operating decision maker. Yeah. So I'm going to ask my wife if I could be that in the house. I have a suspicion I'm not going to get that title awarded to me.
I don't think so.
No. Okay, so that is a lot of information that's going to come out as disclosure. So those that work with public companies or work for public companies, there's a lot of disclosure. So going to a different area now, the Private Company Council. The Private Company Council is an organization within the FASB that provides guidance on reporting for private companies. And I mean, there was years ago, you can't have two different gaps. They used to say, FASB's FASB, you can't have two different. And they finally came out with this private company council, and it is very helpful. They have come out with some good information. Well, they had a recent meeting, and they targeted a bunch of areas that I'm not going to go into great detail on them, but they targeted a bunch of areas like they focused on a bunch of areas, targeted income tax improvements for income tax reporting, and I know you've had comments on that in the past. Lease common control arrangements. Unfortunately, they still haven't said if you have combined and combining or consolidated and consolidating financial statements, you don't have to do it for the consolidating. They haven't addressed that. I'm still of the opinion that you have to record it and then eliminate it. Accounting and disclosures for software costs. I thought that was interesting that they're focused on this again. The one that surprises me, and Nicole's going to hate that we bring this up, is profits interest. Profits interest. And I like to say that because it's a tax concept. And Nicole DeRosa, who's great at doing tax presentations and does her own IssuesWatch, will get mad that we talk about tax stuff. But there is an accounting concept because it is very related to equity type of compensation. So you should really look into that if you have it. We've seen it more in our office. Accounting and disclosure for crypto assets. Didn't the FASB just, anyway.
I think that's interesting there is they're going to have the FASB for big gap, right? And then, not to say this little gap, but PCC is going to have a whole different way to account for crypto. Very confusing.
Yeah. Meanwhile, we've been asking this for a while. And finally, stock-based compensation. Okay. Moving on to the AICPA. So what I want you to remember, you're going to have audits coming up soon. Year ends are coming up, and you're going to have audits for the year end. And you always have to remember fraud considerations as part of the financial statement audit. One of the items that you should always consider is management override controls. It is a presumptive fraud risk, along with revenue recognition. When SAS 99 came out, they had the two areas that were presumptive fraud risk: management override controls and revenue recognition. Let's not get into the debate why those, just accept that, and then there can be others. So one of the concepts that was out in their Journal of Accountancy article, if you haven't seen it or if you don't get a copy of it, get yourself a copy of this article. It's a great article. It talks in September of 2022, it talks about the use of Benford's Law in an audit. And what it says is Benford's Law can help uncover indicators of fraud and anomalies that arise from legitimate business practices. And what it does is it identifies general ledger irregularities. And you'll say, Brad, what is this Benford's Law or Benford Tools?
I thought of Tim Taylor.
Yeah.
Two-time.
Yeah, more power. Right, exactly. In short, it's analysis of numeric patterns and focusing on ridges and valleys. So you do a data analysis, and it shows you numerical patterns, because you could talk to a certified fraud examiner. They will tell you there are patterns on how people perpetrate frauds. And they'll always write checks with this number in it. They'll always record journal entries with these numbers in it. So there are patterns to look at. And it might be peaks or valleys that you should be focusing on. But that's a real short explanation of I want to say Benford's Law. So I'd recommend you look into that.
I think it's very important too, because where most of the errors are found or fraud is in journal entries. Mm-hmm. That's where they put it.
Yep.
So let's move on to SEC update real quick. The SEC voted on October 12th to adopt amendments to electronic book record keeping for broker-dealers, security-based swap dealers, and major security-based swap dealers. What they're doing here is they're saying technology has advanced over the last 20 years, but the record keeping has not. The requirements for record keeping has not. So they want now these broker dealers to now modernize their technology, use the technology so they can keep the records so it's quickly available and that can be turned over to the SEC at a moment's notice.
Yeah, interesting.
So it's going to be interesting coming down the road.
And I audit broker dealers, so I'm going to be interested in seeing this.
Again, what we see is a lot of transparency occurring and a lot more information out there. They want to use technology now. So I think we're going in the right direction.
Yeah, and we did a presentation yesterday on the other day. I mean, on the new SAS on evidence, and they talk about auditing tools and automation in general. That's great. And so, in closing, let's go over some items. I'd like to remind you about some upcoming NJCPA events. Learn more about crypto assets at a free membership plus webinar. Understanding Digital Assets. Attend on November 10th or November 16th. and take a deep dive into assessing the risk of fraud in financial statement audit during an 8-hour webinar on December 6th. Register for these events and more at njcpa.org/events. And be sure to join the NJCPA Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/events/groups. Sorry. Frank, thank you for joining me, and thank you everybody else for watching and listening.
Glad to be here, and I'll come back again.